and psychological. That's very, very important. In other words, if you don't take care of yourself, you won't be able to enjoy your money, you won't be able to attain financial freedom. Now, in terms of setting financial goals, this kind of obvious. We've been told this time and time again. You must set goals. So I won't jump much into that. And also, in terms of creating a budget, this has been told us time. And being Rotarians, I'm sure budgeting is something new to you. I also know that from your experience and my experience, that budgeting is perhaps the most important tool of financial freedom, because budgeting helps you to track your income and also your expenditure. So I won't go much into details about that, but I can welcome questions later in case anyone's very much interested to talk about budgeting. Now, we know that budgeting helps to ease our spending and our saving. Budgeting helps us to spend cautiously. Budgeting helps us to be disciplined when it comes to saving. Budgeting helps us to follow our financial goals. And you know what? Budgeting helps us to control our money. Now, it's also very important to note that budgeting can help us reduce our expenses and increase our income, because budgeting is a monitoring tool. Now, along the line, I'm sure someone will ask, how can I make sure that I stay within our budget? Because most of us and most corporates, including most governments, normally stray and don't live within the budget. Now, you can do that by reminding yourself time and time again of your planned expenditure. You can do that by making sure that when you're budgeting, you plan for unexpected developments. That's very common in Uganda. You can do that by making sure that you do not spend your savings, and you make sure that in your column when you're budgeting, the savings are not touched at all, unless if circumstances warrant to do so. Now, the other thing I want to point out, if you want to be financially free, is that you must embrace the aspect of negotiating. Whether you go to a market, whether you go to a bank, make sure that you negotiate. In Uganda, whenever you go to a market, you must embrace negotiation skills. Should be a given. If you don't have them, please acquire them, because in order to get very good deals, you must learn how to negotiate. Now, before I continue, I want to emphasize one thing, that one of the philosophies you have to develop if you want to be financially free is that is the philosophy of less is being more. Less is being more. Spend less, but invest more. Spend less, but invest more. So from now on, adapt the philosophy of spending less, and also adapt the philosophy of spending wisely, saving regularly, and investing prudently. Saving can be a very big challenge, but ladies and gentlemen, you can all save. All of us can save. I know it can be challenging, but all of us can save. Even the poor people can save. I don't believe that anyone can fail to save. However little you earn, you can save. Now, of course, you know what saving is. Saving is putting aside something for any day. That's obvious. And in terms of sources of saving, you can either save from your income, or you can save by reducing expenditure. That's pretty obvious. And the saving plan is a tool you can manage to save your money in the short term, long term, and medium term. You must have saving goals, objectives for savings. That's very, very important, because you must have something that inspires you to save. You must have an aim, you must have an objective. Otherwise, you won't be inspired to save. Now, in terms of saving goals, I talked about. Then saving for emergencies. This is very, very, very important. Please put aside some money regularly for emergencies. Our culture, for instance, requires that. I'm giving an example. In case maybe your relative, say a brother or sister, loses. In case God forbid you lose your sister or your brother, chances are very high that you'll be expected to contribute to the well-being of his or her children. That's an example. Now, just imagine you have no emergency fund, you're not budgeted for that, and people know you have a very good job, maybe at a World Bank or at any corporate. How will you tell your relatives that you can't contribute even a penny. But in case you had an emergency fund, that will come handy. Then the saving culture should cut across all your family members. In case you have children, I do encourage you to impart onto them the saving culture. That will help you in future. That will also help you in case you live a long life, because your children will sooner or later stop being dependent on you if they start saving early. Now, in terms of security, I'm sorry to laugh, but I don't expect people at our level to be saving under our mattresses or under our beds. We should be saving with the viable institutions. You should be saving in the viable instruments. You should be saving in vehicles that are viable, commercial banks, any other institution that's viable to be support to be a commercial bank. Very important. Avoid saving in boxes. Okay, and when you're saving, please make sure that you have the right criteria to help you choose the best vehicle or best instrument to save. Now, in terms of compulsory savings, for those who are employed, we're a little bit lucky that we serve mandatory. It could be government pension schemes, it could be private pension schemes, even the National Social Security Fund is a form of saving. Now, this is very handy, especially when it comes to retirement, because most people, the world over, not in Uganda, don't save for their retirement. But for those who are employed, especially in government or big corporates, it's fortunate that they are forced to save. They're forced to save because it's not so good to hustle when you're old, and it could impact on you. Now, please be advised that saving is not easy because the factors that affect our saving levels. And I love to discuss that during the Q&A. Now, please allow me to talk about another aspect that can impact greatly on our agenda for financial freedom. We as Rotarians, we as corporates, and that is loan management. I've been advised that that's well over 65% of people employed in Kampala have loans, and a number of them, including some of us, are struggling to keep up with the loan repayment. A number of us have got challenges with debts and loans. So let me take some time looking at this aspect and show you how it can impact our financial freedom. Now, we all know what a loan is. I won't go into that. Then we know that it's a cycle. You apply, you assessed, you approved, the money disbursed, you monitor, then you repay. But it's very, very important to know why we borrow money. Why people borrow money? Some borrow to invest, others borrow to spend on unexpected emergencies, others borrow to consume or to purchase items that they cannot afford to purchase. The debate, though, is that getting a loan is something very bad. Okay, and others saying that borrowing money is something very good. That's a very big debate. But now it depends on what you use the money for. It also depends on other factors, like the source of the loan, and other factors like the interest to do the loan. So let me look at those aspects briefly. Now, you must understand, before I look at those aspects, that whenever you borrow money, that money is not yours, it's for someone else. Therefore, you're obliged to pay the money. Okay. Now, and when you borrow money, is that you are restricted. One, the money is you borrow at a cost. Number two, you have to repay that money, including obligations like interest. Then number three is that although borrowing helps you to get the money quickly, if you don't have a repayment plan, you always be worried because they need to pay, and the consequences of failure to pay can be very dire, as I'll explain later. Now, before you borrow money, please have a checklist. Ask yourself, do you really need that money? Evaluate all the options for meeting the financial need. Don't look at borrowing as the number one solution. No. Just sit down and evaluate other options. Be a friend can help you out. It could be some saving that you've forgotten about. Okay. Then number two, ask yourself how the money will be used, the money you borrow, and also whether the money you borrow will help you earn more money. That's very, very important. The third aspect you must consider is the cost of taking the loan. Because as I said earlier, borrowing money is at a cost. Okay? And finally, ask yourself, can you afford the loan? In other words, will you manage to pay back the loan? Because the consequences can be there. You may lose property, you may lose friends, even your life can be in danger in some aspects. Now, before you borrow money, again, you have to be aware of the amount you pay back, including the principal, the interest, and the fees. You must be aware of your source of income or savings and establish whether that income or savings you have can help you make the payments. Okay. Then when you actually get the loan and the money is in your hand, before it's in your hand, ask yourself whether you really need it. This is very, very important because some institutions, especially commercial banks, can give you a grace period. If you find that you don't need the money, you take the loan back, and maybe you could be penalized minimally, or you can be advised what to do. But always ask yourself whether you really need the money. Then the other thing you must understand or must establish is whether the investment from the loan generates and the return is higher than the interest you're going to pay. In other words, whether you can make profit from the loan you borrowed. Okay, so always ask the lender what the interest rate is. Ask the lender how often you must pay the principal and interest. Be aware of the amount you must pay for every installment. Establish on your own or by use of by consulting an advisor, how much savings you're required to make the deposit every time you're going to install. Then also be aware of the fees that must be paid to pay the loan. Then also ask the penalties that are charged because of late repayment. Okay. Then ask where are the loan repayments to be made. Okay. If it's a meeting place, the meeting place will be secure. Okay. Then in terms of collateral, ask what the requirements for that collateral are. People have lost property, people have lost land titles, people have lost cars, people have lost houses because of not understanding the requirements for collateral. So loans and debt management are very important aspects, and they can easily and significantly impact on your aspects of achieving financial freedom. Now, in terms of interest, please be aware that there are basically two types of interest in loans. One, flat interest, that is interest which does not reduce with the loan repayment. The other one is interest in declining balance, that is interest payment that reduces with loan repayment. So from the onset, before you put pen to paper on the loan agreement, understand the kind of interest you're paying on the loan. Okay. Now, some loans are good, some loans are bad. A bad loan could be a loan where you can be even taken to prison, or you can be harassed in public. A good loan could be one that the condition are not so harsh. You can be handled in a good way. It could be, it's possible to schedule the repayment terms. It's very, very important to categorize the loan you've taken from anybody or from an institution. Now, again, let me emphasize, it's very important to know the additional fees and penalties, to know what happens in case you're likely to lose your own asset like collateral. Now, in terms of guarantor, if you're very, very careful to be a guarantor of a loan, because the consequences in case of failure are there. The guarantor takes responsibility in case the borrower fails to pay the loan. Okay, then there could be possible arrests and above all, reputational damage in the community when you fail to pay back the loan. I'll talk about the consequences. Now, I don't know whether we have time, but I'll love at the end of my presentation to have a discussion about why people fail to pay the loan, and also to have a discussion on the possible solution. That will come later. Now, before I move to the next aspect of my presentation, I'd like to point out a few tips on how to avoid loan default. One, when you're borrowing, please borrow only the money you can afford. Number two, if you miss payment, Make sure to be honest to the lender about your troubles. Don't run away, don't hide. Go and face the institution, go and face the gentleman or the lady and tell him or her what is going on with the troubles. Okay. Then the other thing is get advice about how to repay your loan from a lender, from friends, from family. Okay. But above all, cut some expenditures in order to make your debt repayment possible. Okay. Now be careful also when you are getting loans, because some terms and conditions may not be favorable, some terms and conditions may be ambitious. Okay, some processes of getting loans are easy, others are difficult. So before you go into loan or debt, please establish all these factors. Take your time, do your survey, do your research. Never ever borrow money. Never ever borrow money in a hurry. Otherwise, you may end up in a position that will be very, very far from attaining financial freedom. Now, where to get loans? This is very, very important. I always advise people when they get to borrow money, it's good to borrow from an institution that is regulated by the central bank or by any authority. Avoid money lenders who are not regulated, because sometimes their conditions are hard to fulfill. Sometimes they change goalposts along the line. Okay, that's very, very important. Now, why am I emphasizing loans and debt management? The reason is that most people are in our category, me inclusive, are burdened by debt and loan, yet we are not well schooled in the aspect of managing loans and debt. We are not well schooled. And the consequence of that is that it does impact on our ability to become financially free. Okay, financially free. But in addition to that, to the loans and also loan management and debt, there are some aspects, general aspects we need to know, to understand about money. I call them general ideas about money. One of them is that you must have a general understanding of the money menu. Money menu. Money can be spent, money can be saved, money can be invested, money can be shared, money can be used for others. The other idea you must understand in order to attain financial freedom is the difference between a need and a want. A need is something you can't do without. Okay, a want is something you can do without, but then it can be used to fulfill your desires. For instance, in terms of differences, if you're thirsty, you can either take water because you need, or you can buy a glass. You can take orange juice or soda or any other drink that's not alcoholic. The thing is, in terms of differences, water can quench your thirst. That's because the need is a thirst. But juice, soda can also be used to fulfill your desire. You understand? In other words, it's very, very important going forward, especially when you're making decisions, to understand the difference between a need and a want. The other aspect, the third idea is wealth consciousness. You want to be rich, you want to be financially free. Try to think the way rich people think. Try to behave the way rich people behave. Read books, rich people read. Interact with rich people. Network with rich people. In that way, you'll be able to get that consciousness of affluent people. The fourth aspect is about human relations. Now, attaining financial freedom won't be possible, however much money you make, however much money you save, if you do not get along well with people. You must develop skills of getting on along with people. And the advantage is that in Rotary, there's a lot of networking, there's many networking opportunities. And also Rotary, I believe, does give you an opportunity to harness human relations. Very, very important. Hard work is a given. I must be a hardworking person. But above all, you have to understand the monetary system. Finance is about a system. It's a number system. It's a numbers game. That's a system. Therefore, it's very, very important to understand the system. Take time to read about money. Take time to understand monetary system. Take time to understand the workings of finance. Okay, especially numbers. A numbers game. If you're not good at numbers, take a moment or two to consult. Okay, to consult. It could be through seminars, it could be through workshops, it could be through books, it could be through taking short courses. Be thing I want to point out though is that to be financially free, you must have basic knowledge of financial statements. This is a numbers game I mentioned earlier, but also it's also a game about statements. If you go to a bank to borrow money, they won't ask you much about who you are. No, chances are they look at your statements. And the key statements you must understand are the statements about cash, the cash flow statement. That's a statement that records the actual cash you earn and actual cash you spend. The statement about income, the income statement, that includes also the projected money you expect and the actual money you spend, the actual money you earn, and also the balance sheet. That is the statement that enables you to state how much you have against how much you owe others. Now, these three statements are very, very important. Please, if you want to be financially free, you have to have a basic understanding of these three statements. Because even if you are employing an accountant or you are using a financial advisor, he or she will advise you best based on this statement. So it's very, very important to have a very good understanding of these statements. That will help you be financially free. Now, of course, during this month, I'm sure you've come, and even before, you've come across these tools that I'm displaying now. And earlier on, I mentioned some of these tools as being pillars of financial freedom. I talked about the planning, the budgeting, the saving, the reading. We talked about borrowing. We also talked about the investing. Now, what I want to emphasize in terms of financial freedom is that you have to live, not within, but you have to live below your means. Usually, people are encouraged to live within their means. But I'm saying, and I'm urging everyone, that in order to attain financial freedom, it is very, very important to live below your means. To live below your means until you attain financial freedom. So if you've been spending $1,000 a month, ensure that you spend 900, 800, 600, until the time when you get out of living below your means. In financial freedom. But as Rotarians and as people who have worked for some time and reasonable exposure, I also like to point out something that financial freedom cannot be attained unless you understand how our income affects our ability to be financially free. And in terms of income, I'll divide ourselves into four groups. Most of us who are attending this fellowship are either employees or self-employed, or owners of big businesses, or investors. Now listen to this. As employees, we pay 30 to 40% of our salaries in taxes. In addition to that, we pay our taxes before our expenses. Then when we go to borrow money from banks, or for various reasons, banks will only look at what they pay. And in most cases, if you have to start up businesses, however small they are, you have to borrow money to start up businesses. Now, for those who are self-employed, it's a little different ballgame. But again, if the company or the entity is not registered as an SME, the tax burden could be huge. However, look at the big business owners. Their earnings are much higher. Then they can pass on the expenses to the companies in terms of maybe companies paying for their holidays, paying for their cars, paying for their fuels. And when it comes to taxes, they pay tax on dividends. And then legally, they have good options of reducing the tax burdens. And they also pay taxes only after taking care of the expenses. Now, when it comes to borrowing, most owners of big businesses borrow to expand businesses. The investors and big business owners are sort of similar, but the biggest aspect of the investors is that the source of funds are vast and many, depending, of course, the kind of businesses, and also the enjoy tax holidays. Now, the point I want to make is that as Rotarians, our aspiration, the aspiration of Rotarians could be to grow from startups, SMEs, to big business owners, and eventually investors. Point to note is that most big owners, like McDonald's, for instance, invest in other sectors. Then I know that McDonald's does invest in real estate. On Outlook, McDonald's looks like a big fast chain company, but in reality, McDonald's is an investor company in the real estate subsector. Now, when you're investing, it's also very important that you invest in something that you like, in something that you're passionate about. Okay, in that way, you'll be able to attain financial freedom. Otherwise, I don't see a Rotarian attaining financial freedom on his or own without taking this suggested work. You can make a startup company as a group, 2 or 3 or 4, 5, bring into an SME, become business owners and eventually investors. In that way, your journey to financial freedom will be clear and be kind of smooth. Now, what do you need to do? One, you must take action. You must decide that now is the time to change and take action. And number 2, you have to start taking control of your money if you haven't started already. Now, by taking control of your money, managing your money, you'll be managing your future. And in that way, you'll be setting yourself on a platform for growth by building your future, by securing financial freedom. Now, after having taken action, manage your finances and growth, there will come a time when you have to embrace automation. Most of us have made an attempt in automating our lives, but in terms of finances, you must automate all your financial systems. In that way, you'll be able to maintain your degree of financial freedom. I don't know whether I've run my time, but in summation, I'm saying that financial freedom is about more than just being able to cover emergencies. As a Rotarian, financial freedom starts when you realize that you can meet the needs of others. Imagine being able to bless a struggling family, for instance, by paying school fees for children. Now, this calls for behavioral change. You must change your behavior in terms of your attitude to finances, in terms of your expenditure, in terms of your savings, in terms of your priorities. And that means you have to live like other people. You must be unique the way you live. You must be unique the way you spend your finances. Now, if you live like no one else, later you can live and give like no one else. At that point, my dear ladies and gentlemen, it won't be just about you anymore. It will be about creating a legacy. It will be about creating a legacy for a Rotarian. Thank you, and good morning.
Thank you very much. Good morning, Rotarians. You are president-elect for the Rotary Club of Kampala Break, and I'll be moderating the Q&A session today. The speaker has taken us through the path of money, to saving it, and to ensuring that it multiplies through viable investments. My colleague KK has given us the pillars to get us there and emphasize the need for budgeting. Friends, I welcome you to shoot that question, that burning question, or make your comment in the chat lounge. You can either do this by raising your hand, or as I said earlier, jotting down your. I'll be taking 3 at a time. Friends, dialogue is open. Shoot. I'll start off with a few questions and comments that have come through. One is from Rotarian David Semakura. He starts off with appreciating the guest speaker for such a wonderful presentation, and then requests for more clarification about the loans that have brought down the borrower's life along built investments. I'll try to rephrase that, guest speaker. Could you comment about the loans that have brought down lifelong built investments from some of the borrowers? That's our first. The second is from Rotarian Richard Kalunji. He's asking, how does one achieve financial freedom while sweating through the rough entrepreneurship journey as we know it in this country? And the third is from Rotarian Caroline Mwangizi. If not registered as an SME, the tax burden is huge. Could you provide more information on that, please? Could you clarify on that? Those are the first three. Over to you, guest speaker. Thank you.
Oh, well, thank you. Thank you. Let me start with the last one. Listen to this. It could have been a typo. What I meant was that if you're self-employed and your entity is not registered as an SME, you'll be taxed like an individual. On the contrary, if you're an SME, if your entity is registered as an SME, it will be the SME that will be meeting the tax burden. The point is that you will be paying your taxes like a small company. But on the other hand, if you're an individual, you're paying the taxes as an individual. The point I was making is that if you're self-employed, it's important to register your entity as an SME. What I did not point out, although, is that SMEs enjoy some benefits. That category enjoys some benefits. And also, if you look at the strategies of most of third world countries, including Uganda, they're putting a lot of emphasis on and support on SMEs. Even other organizations, including development partners, they look at SMEs as engines for growth. So registering an SME has got so many advantages. I hope that is clear. Now, the second question is, how far does one achieve financial freedom by hustling, given the harsh environment that is adverse to entrepreneurship? Well, there is no general rule. I can only talk about the principles. One, hustling is part of life. And then number two is that you have to look at your environment and then see how best you can navigate. But let's look at it this way. One, you have to set yourself targets as an entrepreneur. A targets to move from entrepreneurship to being a big business owner. You can do that by coming together or with colleagues or business partners, so that you're still being an entrepreneur to being a big business owner. Then number two, you must be well schooled in the aspects of numbers. You must be numerically fit, numerically sound, because about numbers. That is, so you must be very strict in terms of the expenditure, in terms of budgeting. Truth be told, that a number of entrepreneurs in third world countries use their entrepreneurs' resources to finance other aspects. I could give you an example. An entrepreneur, jeopardize their reserves or their savings of their enterprise to invest in something that has not been planned for, or to expand and strategic. So it's very, very important as an entrepreneur to be very strategic in your plans, to be very strategic in your approach, and to always aspire to become, to aspire to being big business. Now, it is fortunate that in Uganda we've got various organizations that support entrepreneurs. What comes to me in mind is Enterprise Uganda, run by Mr. Charles Ochichi. Whenever I always advise entrepreneurs who are very serious on the business, who aspire to grow big, to contact Uganda Enterprise Uganda, because Mr. Chichi has helped many of them to grow from being entrepreneurs to being big business owners. Now, the final question I don't get clearly. Let me try to see if I got clearly. It's about loans that affect lifelong build investments. Hello? The last question, the first question.
It's just a request for a comment on loans that have brought down lifelong build investments. Lifelong investments.
It's about someone wants a comment on loans that have brought down.
I can clarify if you give an opportunity.
Okay. Let David clarify. Thank you, David.
Yeah, we have seen people who have struggled through life to build, to build empires, whereby you see he's almost at the level of financial freedom, but all of a sudden, late in life, he takes in some toxic loans, which brings down the whole empire like a pack of cards, and it is wiped out. I wanted to comment on that, how it can be, how we can protect ourselves from such a scenario.
Thank you very much. In other words, you're saying somebody has built a fortune for a while, then late in life, he or she takes a toxic loan and everything built comes crumbling down. Right?
Yes, please.
Now,
Yes, please.
This will be my proposals. One, the principles of loans that do apply. They must be applied to the full. One of them is before you take a loan, ask yourself those questions. You're a corporate, you built this business from maybe for 30, 40, 50 years. Is that loan necessary? That's one. Number two, is that loan the best alternative? Now, in most cases, it is the second aspect of options and alternatives that most people don't fully explore. Let me give you an example. If you are in the agricultural processing industry and you want to borrow money and you have an entity built over for 20, 30 years, when you approach some commercial bank, they may tell you, well, they're willing to help you. And you may take the loan offered by them on their terms. However, if you've done some more research, you'd have realized that there's a facility at the Bank of Uganda, which is administered by the Bank of Uganda through commercial banks, called the Agricultural Credit Facility. It's a very good facility. It gives, I think at the moment, the rate of interest is well below, it's below 10%, I think it's like 8%. It gives a grace period of 2 years before you start serving the loan. Then number three, the other terms and conditions are not as harsh as terms for commercial banks. Now, just imagine if you are not aware of that facility and then you take a loan from a commercial bank, chances are that the loan burden and the challenge and the hassle will go through will be much higher than a colleague who went to the Bank of Uganda. The other example I can bring is Uganda Development Bank. I think most people are not aware, but Uganda Development Bank has a facility for helping out people who are planning to invest, to start industries or to expand. And because the government of Uganda is very, very serious on promoting industrialization. Now, and the beauty of the facility at the Uganda Development Bank is that they look at what you have, what you plan to have. They look at, of course, your statements. They look at, of course, your structure. Now, just imagine if somebody was not aware of the facility at the Uganda Development Bank and he or she went and borrowed money from a normal commercial bank. Now, because of the volatilities and the vagaries of our economy, chances are that along the line, that kind of loan might be a little bit problematic to clear out. However, if somebody goes to Uganda Development Bank and gets the favorable terms and conditions, plus the supervision and the monitoring, that way the entity might stay. The point I'm making is that most of the time, this is my opinion, I could be wrong, most of the time, why lifelong build entities go down due to toxic loans is that the people who make the decisions to take the loans don't explore the entire landscape. If they could take just a moment and think a little more and do some more research, chances are they'll come up with the best decisions and therefore get the best loan deals. Thank you.
Thank you, guest speaker. Members, in the interest of time, we will have to end our Q&A session now. However, the discussion continues on the Daybreak YouTube channel. And those who would wish to stay, I would request our guest speaker to stay for another 10 minutes after the end of our Rotary Fellowship, so that he can respond to some of the questions I already have. Thank you, and over to you, Mr. President.
Thank you very much, PE.
Mr. President, over to you.
Thank you very much, PE. I would like to invite you, PAG Dr. Timothy Basima. Basima means they are appreciative. So to do what that your name suggests. Over to you, Doctor.
Thank you very much, President Frederick. And the Fredericks definitely wanted to talk together. To our guest speaker, KK, as Rotarian Edward calls him, the financial freedom you've planted into our brains, into our medulla oblongatas, is going to be permanent. You have mentioned that we need to have financial dependence. We need to learn to survive, and we need to learn how to stabilize ourselves so that we are comfortable. But also you've mentioned that we need to work, save, and have a clear personal development. Though you had also to say that saving is not easy, especially in our African culture. Our guest speaker, financial management, which is a key aspect to everybody's life, is something that you've told us to know about borrowing, knowing the cost of taking the borrowing loans, and also how we can afford to pay them. This has been so good, and we appreciate you, KK, and we pray that one day, one time, you join Rotary Club of Kampala Daybreak as your comfort zone as a Rotarian, so that we make a difference in society together. Thank you very much, and the appreciation certificate is over there displayed on the screen, and we pray for blessings. Thank you very much. Over to you, President.
Thank you so much, Dr. Tim. Like they call you in Daybreak for moving the vote of thanks. And to you, our guest speaker, allow me add a voice to Timothy Basima to say thank you very much. A quick takeaway to you, my brother CP, my friend. We've learned that we need to first save, then spend. Thank you so much. Allow me invite our Sergeant at Arms to very quickly go through the statistics. But as he does so, I request that you allow us only 3 minutes to enable us bring this fellowship to a close. Sergeant, you have 2 minutes.
Thank you, President. Let me hope I'm audible. Good morning, everybody. Statistics of the day as follows. We had over 181 participants, 53 Rotary clubs, 1 Rotaract club, and 2 registered guests. And the guests were Mrs. Ogwal and Miss Christine Naguja. Without any further ado, President, I would like to go through the roll call of clubs, starting with Naguru, Nambole, Weyogere Nambole, Entebbe, Bulova, Nansana, Bukoto, Sunrise, Chigo, Chiwatle, Kampala South, Port Bell, Mukono, Acacia Sunset, Kibuli, Kampala Alibad, Namasuba, Kansanga, Ntinda Metropolitan, Arua Eco City, Kitante, Zambia, Inner Wheel of Kampala, Kira, Kiboga, Mengo, Kampala East, Makinde West, Natete, Masindi, Kampala, Luboa, E-Club of Uganda Global, Sonde, Kampala Metropolitan, Kampala Sese, Muyenga, Mengo, Ntinda, Hwema Kitara, Nansana, Nsanji, Mukono Central, Muyenga Breeze, Kololo, Lubaga Lakeview, Makindye, Kampala North, Mutundwe, Kampala Seven Hills, Wakiso, Kasangati, and Iganga. If I haven't mentioned the club, please document it in the chat group so that we maintain our record. We had 1 Rotaract club, and that was Rubaga. The club of the day was Sunrise, due to numbers.
Thank you very much, Sergeant at Arms. As I invite you, Rotarian Amanya Wilberforce, to prepare to give us the final toast. I would like to.
Mr. President, which numbers? The financial numbers that Sunrise has or the number of presents?
I presume it is the number of presents, and thank you very much. But
Number of
comrades and
presents.
thank you so much for being with us this morning. We don't take it for granted that every Thursday you're with us. I would like to appreciate our Rotary leaders in a special way in the categories of the past, present, and future leaders, ranging from governors, assistant governors, and presidents. And to you, my fellow changemaker presidents, thank you very much. It is always warming to have the very many numbers of you. I pray God will give me and the daybreakers the grace to return these numerous visits that you make to us, and to you all our Rotarians. And to our international partners, led by VCC Jaja Muzungu. Thank you so much. We are so overjoyed to have you as our international partners, trading in the same currency, including coins. So thank you so much for being with us. Friends, allow me invite you, Rotarian Wilberforce Amanya, to give us the final toast.
Thank you, President. And good morning to you all, fellow Rotarians and friends. And for this very important and informative session that we've had this morning, as a key takeaway that as Rotarians, financial freedom begins when you realize that you can meet the needs of others. With that in mind, ladies and gentlemen on call this morning, touch the most important part of yourself. And as I propose a toast to Rotary International.
Thank you very much, friends. May God bless you and make you a blessing.
Thank
you. Be well.
Thank you so much for a very elaborate presentation that you did there.
So, am I answering them questions now, or you have left?
Yeah, we can carry forward with the Chimeza. There were some very interesting questions.
One of the questions was, would you advise someone to spend all their benefits? Retirement is a very tricky thing. I wouldn't advise anyone to. I will not advise spending all your retirement benefits. No, because you never know how long you're going to live. You may retire at 65 and they're at 100. So if you spend everything you've earned in retirement, what will you live with? What I would advise is, one, you have to invest some of your retirement, because you don't know how long you're going to live, but invest in assets or vehicles that are easy to monitor and are less strenuous to monitor. For instance, government securities or umbrella vehicles offered like one offered by EAP, or something like land, because when you buy land is there. You look at it, you know. That's number one. Number two, you have to have like a plan for your retirement. Then you start now. You start planning for retirement before you retire. You know, always make up your mind what you want to do in your retirement. I always advise people to look at something as a hobby, invest in something that you like. For instance, myself, I love football, so I'm investing in a football academy. I'm investing in a football team because I love football. I love football, so invest in something that you want. Number three, put aside some money for charity, because we must give back to society. It's always good, maybe 10 or 10% to charity. Then number five, of course, never leave something for your children. You have children to be good at it. Then the other question is about the legal framework for registering businesses. I'm not a lawyer. I'd advise maybe someone on the framework to advise in terms of registering businesses. That's one is there someone, a lawyer on the forum that can advise? Please, maybe after you can come in and advise. Then somebody told me to comment. Someone advised me to comment. Someone suggested I comment on returns versus risks for investment. This is there's a general rule that the higher the return, the higher the level of risks. I don't know whether that works. However, it's always very important to have very good risk analysis skills. Risk is part of life, and these days, whenever we have teachings on financial empowerment, we talk about risk. And you must understand that risk is not something that has happened. No, risk is something that can happen, but can have their consequences. So always have the ability to analyze the risks. You can analyze risks from the perspective of the environment you're working in, from the people you're using, from the money you have, from the location. Always analyze the risks. However, the bottom line is that usually the higher the return on investment, the higher the risks. Then somebody asks about how can you gauge the viability of a SACCO. Now, I'm a member of a SACCO, and before I joined that SACCO, but I don't regret, I won't mention the name, because not good, but before I joined that SACCO, what I looked at their statements, and I was impressed. I looked at the management of the SACCO. I'm a Christian. Normally, I'm biased towards religious registered SACCO. So I was impressed by the fact that these people have very high moral values, Christian values. Then I also looked at the way they administer the loans, the paperwork they go through, the counseling over their clients, because this particular SACCO, I'm a member, they have workshops for financial inclusion, for financial literacy, for financial consumer protection, and members really learn. Then they have general meetings regularly, and they allow members to express themselves without any freedom, so without any fear and favor, and all questions are answered. Then above all, you must have referrals. If you've not had anything good about the SACCO, and you've asked about 10 people, 12 people, please run. Please run. Referrals are very, very important. Now, that's how I look at the SACCO. But above all, the SACCO has to be registered by a regulatory authority. It must be regulated by the people in charge of SACCOs. Then somebody asked about SMEs. I think I talked that before. I mentioned that there could have been a typo in my presentation. The point I wanted to make is that SMEs enjoy certain benefits. One, in terms of strategy, most third world countries have look at SMEs as engines of growth for economy. And there's so many advantages as a result in terms of finances, in terms of support like training, in terms of other things like when you're applying for loan and the SME, chances are you won't be charged the rate of interest won't be as high as someone who's self-employed. In terms of taxes, when you are paying the tax as an individual, you feel the burden. The liability will stop this. Individuals stand this risk. Then somebody asked whether I could support a salary loan to buy land. Well, there's a general rule about purchases. However, the land you're talking about, land is one of those things that appreciates in value over time. At the same time, a salary loan has one advantage. There is no collateral, and the money is deducted from your salary. So I would say yes, but with the following caution. One, make sure the land you're buying is in a place that can easily appreciate the value. Number two, make sure that the land you're buying has no controversy or undue thorough research. A number of people have bought fake land and they've ended up regretting. Number three, in case of a salary loan, it's very, very important to establish what happens. Just establish with the person with the institution lending the money. What happens in case you lose a job, or what happens in case you're discontinued, or in some cases they ask for a letter of undertaking so that they can impact on your social security, on your savings. Like if you are employed by a corporate that serves NSSF, the lender will ask you for a letter of undertaking, just in case something happens that your place work. They can impact, they can attach your savings. So all those factors considered, I will say yes. Because one, land appreciation value. Number two, salary loan is not backed by collateral. I think that's all. That's all for now. Are we done?